JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 13th of July 2020, so yep, welcome everyone. Welcome to this Monday's morning live session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. Now then, let's quickly have a look at what's happening here globally. So the figure is, well, it's showing it's sitting at 13 million. Well, not full 13 million, but to be honest, some other sources are saying that we are already above that. So basically we have hit the 13 millionth barrier, and of course the good sign was that during the weekend the cases have decreased slightly. So yep, the market kind of saw this as a positive, especially going into the opening up today in the Asian session. And if we look at the for example some of these indices here, for example like Nikkei 225 here, you can see that the index is pushing, or actually has already pushed above the high of last week, this 22,734 level that I talked about last week. So basically we had a nice reversal here from the 21-day EMA and this short-term upside support line taken from the low of the 15th of June, and in addition to that, the index managed to close today above the the high of last week. So this way kind of indicating that it's still showing willingness to push a little bit maybe further north. However, of course we'll go step by step. We'll see how today's trading is going to get along in Europe and the US, and yep, we'll take it from here basically tomorrow, and we'll see how it's going to perform. To be honest, for now everything's still kind of looking a little bit more positive than negative. We could aim for the highest point of June first, of course, near the 23,185 zone, and to be honest, would probably keep it for now here somewhere just to see how it's going to perform near this high. And if it does want to overcome this barrier, then of course, yes, that's wonderful, good news for the buyers. A higher high would be formed, and the next target could be the high of the 20th of February near the 23,806 territory. But again, all this basically is if the price continues to balance above the short-term upside support line, and also maybe in addition to that, if it continues to kind of float above this high of last week near the 22,734 mark. Now jumping into Shanghai Composite, now this index traveled higher today. I mean, it's still trading. I mean, we still have around 55 minutes left of trading on the Shanghai Composite, and the best, well, the positive aspect of it is the fact that it's well, it tested the high of last week, but as you can see, it's kind of struggling to overcome it. But don't get me wrong, I mean, it's very close right now to it, and we still have like I said, around 15 minutes left. So maybe eventually we could see a nice push above this, and in a way maybe we would have to now redraw this Fibonacci that I've drawn last week. So for now probably I'll get rid of it again, because as you can see, the pair is now trying to make its way above the high of last week near the 3,457 territory. So we do get a nice pop, and we do get a nice daily close above that area, then of course further acceleration to the upside could be possible, where the next target could be the high of the 5th of February. Let me just quickly double check this. So the high of um, uh, 3,487, that's the high of the 5th of February. There we go. So let me just quickly, guys, double check this because it's very tight here. So yeah, the high of the 5th of February, there we go. That could be our next little target near the 3,487 mark. And of course, if we do overcome that, then the next target is the highest point of January 2018. And by the way, that's 5th of February. That was 2018. So but if that gets broken, then of course, like I said, the highest point of January of 2018 could be the next level to watch, the 3,587 zone. Now, in terms of the downside here, of course, if this starts falling back below the 3,336 territory right here, then we could maybe consider a bit of a larger correction to the downside. But again, keep your eyes on this one. For now, we're very close to the high of last week, so let's see if we can overcome that one. Now, jumping into DAX, the market is not open yet, but let's quickly have a look at what's happening here with the cash index. And we can see that the cash index is pushing nicely to the upside. So, but the most important is that the price right now is trading near the 12,856 territory. So basically, it is above the high of last week, but it's still slightly below the highest point of June. So in other words, it's basically stuck in this little narrow kind of range, well, territory, and we're waiting for this one to kind of make a better move. Now, we would prefer, of course, to get a nice pop above the highest point of June here near the 12,913 territory. Ideally, a nice daily close could do the trick here as well. If we do see something like that, then yes, the next target could be this one. This is our ideal scenario, the 13,795 zone, but marked by the high of February 2020. But of course, slightly below that, we do have this little target, the 13,500 zone, which marks the low of the 21st of February. So in other words, we'll keep an eye on this one, and the most important, we'll keep an eye on the highest point of June, near the 12,913. A nice good pop above it may open the door towards higher levels, and in addition to that, a nice daily close could do the trick here for more buyers, and more of them could start joining in. So yep, let's keep an eye on that one. In terms of the downside, we will need to see at least a break of this upside line before kind of, let's say, considering a possible move lower. However, the more comfortable level, after a break of which we could aim for lower levels, could come somewhere from around here, near the 11,957, marked by the low of the 25th of June. At the same time, the price might get placed below the 200-day EMA, and well, maybe more sellers could see this as a good opportunity to step in. But again, for now, looking at the cash index, first of all, we will be getting a nice opening gap here to the upside, but keep your eyes on the highest point of June. Now, jumping into FTSE 100. Now, this one is also kind of traveling high right now on the cash index, and after last week's hold up here near this area, near this key support zone, roughly between the 5,961 and the 6,030 territories, you can see that the index kind of remained above that psychological 6,000 territory, although we had a little brief overshoot of that level, and today we're seeing a nice push higher. However, as I've mentioned before, on this specific index, we would prefer to wait for a push above the 6,342 zone, somewhere around here, before kind of, let's say, considering some higher levels, because we do have the pound, which is currently a little bit on the stronger side, so against some of its major counterparts. So we'll keep I'll come to the pound bit in a while, but like I said, keep your eyes on the FTSE, because whenever the pound is on the stronger side, it's not really good for the FTSE 100. Now, Gold and gold managed to kind of remain above this short-term upside support line taken from the low of the 5th of June, so that's wonderful. Some good news for the buyers. In a way, for now, yes, we will continue targeting the upside because, like I said, for now the trend, at least the short-term trend, well, actually the overall trend is still to the upside, but the short-term trend here is also to the upside here. We are still trading above this upside support line taken from the low the 5th of June, and in a way everything's kind of pointing to some higher levels. However, if you wish to be a little bit more on the careful side, given that we have already accelerated quite a lot, I would say, so you could wait for a push above the high of last week here, which is roughly around the 1818 level. A nice good pop above it would confirm a forthcoming higher high, and the next target here for us could be near the 1827 zone, or there is another possible level here near the 1845 zone, so we'll keep an eye on that one as well. But of course the one of the best targets for us right now, the one with the ideal scenarios, is the 1921 territory, which is the all-time high for this commodity. So that's why it's going to be very interesting to see if we could reach that level. Now, but again, as I said, for now, be very careful. And yes, we are leaning a little bit more to the upside. However, we would prefer to maybe get a nice push above the 1818 level in order to get a little bit more excited about higher levels. Now, jumping into Ripple, here everything is for now working out according to the plan. So yeah, last week I talked about this crypto a lot, and what I was saying, that in a way it could find resistance near this 200-day EMA, which it did, and it drifted a little bit lower. However, as you can see, it tested this downside line from above, and kind of that this downside line acted as a good support from where the crypto reversed higher and pushed a little bit more to the north. That said, it didn't quite reach the high of last week. It didn't reach the 200-day EMA, but it's currently stuck here. So in a way, it's still there is some positivity in this, in all of this, because the price is still balancing above the 100-day EMA, which some buyers might see as a positive, and could push this crypto to the upside again. However, if you're more on the cautious side, you could wait for a break above the 200-day EMA here, and maybe also a push above the high of June, the highest point of June, which is near the 0.2152 level. A nice good pop above it would confirm a forthcoming high, and the next target could be the highest point of April near the 0.2357. So that's why, guys, again, for now we're keeping an eye on this scenario here as per this arrow. In terms of the downside, we would need to see this one dropping all the way here below the 0.1743 territory before considering some lower areas. All this here will be somewhat of a neutral one for us. Now, jumping into the pairs, so USDJPY, I haven't looked at this one for quite a while, but basically it is a little bit of a messy chart. So in a way, after kind of the pair found support near this 105.94 level, it reversed higher and moved north, but found resistance near the 200-day EMA, from which, as you can see, it reversed back down, and right now it's currently stuck, I would say. So and that's why I have my arrows here for the upside and downside scenarios. So for the upside, for example, we would probably prefer to wait for a break above the 108.16 territory in order to get a little bit more excited about higher levels, because at the same time the rate would overcome the 200-day EMA. But on the downside, we would prefer to wait for a drop below the 105.94 territory here, which, as you can see, acted as a fantastic area of support recently. So so yeah, that's why we will take it carefully here for now. In a way, something to keep in mind here, there are a bunch of tentative downside lines here that we can keep an eye on the chart. For example, this one taken from the high of the 5th of June. There is another one here taken from the high of the 24th of March. So all these are a little bit tentative, and that's why we're not really gonna I would say, focus too much on it, and yes, we might keep them in mind here, but mainly we're going to keep an eye on the support and resistance levels, so, and as the ones that I've just mentioned. Now jumping into GBPUSD, now this is where I was talking about that the pound seems to be kind of getting a bit of buying activity here, well, increased buying activity, and for now what we're going to do here is of course we're going to keep an eye on this idea that I've mentioned last week. So basically the fact that the pair drifted back down, it kind of could have formed here a possible triangle pattern. However, as you can see, the rate drifted lower, it found support near the 200-day EMA and is now trying to make its way up again. So basically we can probably get rid of this idea, we can get rid of this triangle idea, and basically keep our eyes on this little short-term upside support line taken from the low of the 18th of May. In addition to that, of course, we'll keep an eye on this the high of last week, this key barrier near the 1.2669 zone. If we do get a nice pop above it, then yes, higher levels could be met. We're not going to drag this one away too much to the upside. We're just going to aim for the highest point of June 1st near the 1.2813 zone, and then yes, we could, if on a break of that one, we could aim for some higher levels, because such a move would confirm a forthcoming higher high. Until then, if we do get a push above the high of last week near the 1.2669, then yes, we will aim for this 1.2813 zone, but we'll take it from there after, because we want to see if this basically is not going to end up being a possible descending triangle here. So again, also we could keep this idea in our heads. Now jumping into GBPUSD very quickly here, it's a little bit of a tricky one. However, it's giving a bit of hope here for the buyers. As you can see, last week, for example, I talked about this pair last week, and I was telling you guys that if we see a nice daily close above this barrier, above this key important resistance area near the 1.8137 territory, then there's a possibility to see some slightly higher levels here. The fact that we are also still trading above the 21-day EMA, so this is kind of giving a bit of positivity for the buyers. So that's why for now we may kind of aim for some slightly higher levels. We're going to aim maybe for the high of the 15th of June first near the 1.8452, and then we'll take it from there, just because we don't want to kind of, let's say, overdo this and over speculate on this too much. So so yeah, let's keep an eye on this one. The fact that the rate is still hanging above this 1.8137 territory, that's a good sign. The fact that it's still hanging above the 21-day EMA also is a good sign, but if by any chance it starts heavily dropping back down here, still the downside scenario for us could come after a break below the 1.7868 territory, somewhere around here, and then yes, we could consider some lower levels, because such a move would confirm a forthcoming lower low. Euro CHF, I haven't looked at this one for quite a while, and as you can see, all the arrows here, it's a little bit of a mess here. So basically, let's clear up the chart first, and let's start fresh. Now the first thing is that after the pair found some support near this area right here, near the lowest point of May here, which is the 1.0492 territory, it drifted higher and found resistance near this barrier right here, near the 1.0915, and then kind of corrected lower from there. Right now, some might say that the the pair is forming a possible wedge pattern here, a falling wedge, or I would say has been forming a possible falling wedge, and if so, then you can see that the pair now is kind of breaking the upper side of it, and that's happening already today. However, it did have an overshoot here. It did have a break of this upper side of the wedge, but the bears are kind of trying to push this one back down. Of course, let's see how all this is going to develop today. But if this stays above the upper side here of this falling wedge, and also somehow manages to remain above the 21-day and the 100-day EMAs, then there is a possibility we could see this one traveling towards the 200-day EMA initially, and which could be roughly around the 1.0735 zone, and then we'll take it from there, because if it struggles to overcome this, we may see another round of selling. But if we overcome this, then yep, it could open the door towards the highest point of June near the 1.0915 territory. But in case this somehow reverses sharply back down, the downside scenario for us could come on a break of this little area right here, the low of the 25th of May, marked by the 1.0577 territory here, and then yes, we could consider some lower levels here. But again, until then, we're gonna stay probably somewhat positive, or maybe even cautiously bullish, I would say, but we need that confirmation daily close, first of all, above the upper side of the falling wedge, and also maybe just for that extra confirmation of a daily close above the 100-day EMA right here. And finally, EURUSD. So this one is pushing higher today. However, as I mentioned before, still the same game plan remains as I talked about last week. We need to see at least a daily close above the 1.1353 territory, or we would need to see that daily candle kind of staying above this barrier in order to aim for some higher levels, because as you can see, last week we did have an overshoot, but the bears kind of quickly took control and pushed the pair back down, ending kind of the candle well below this 1.1353 barrier. Now, again, the fact that it's right now it's pushing higher, of course, that's a great sign for the buyers. However, just to be on the safe side, we would prefer to maybe wait for a push above the 1.1353 level and then target some higher levels. In terms of the downside, still the same idea will be in place. First of all, a drop below this downside line, yep, could do the trick for more sellers. However, probably even more of those even more bears could be joining in here if this pair falls below the 19 mark here, the low of the 19th of June near the 1.1168 mark, and then yes, of course, this such a move would confirm a forthcoming lower low, and further declines could be possible. Now, so then guys, I really hope you found it useful, and I'll have to wrap it up here. Thank you very much for watching and listening. If you want to catch my video later on, my traders tea time is always 13:15 GMT time. So yep guys, I hope you have a wonderful trading day. Stay safe, and I'll see you later. Thank you very much, and bye-bye.